Markets continue New Year party. Nifty touches the crucial 6,000 mark for the first time in 2 years. Equities gain close to 1% on strong global cues as the US deal to avoid fiscal cliff lifts sentiment. A sigh of relief across global markets as the US House of Representatives clears President Barack Obama's budget deal to avoid fiscal cliff. Asian markets close at 5-week high. In Europe, equities trade at a 19-month high. The government weighs stringent norms on to discourage gold imports as current account deficit jumps to record levels. Finance Minister P. Chidambaram says government has no option but to make gold imports more expensive. The Rangarajan panel on gas pricing proposes an alternative scheme for revenue sharing based on the production and price. Rangarajan tells CT Now that cost-based recovery is becoming increasingly difficult. Good afternoon. You're watching Business Day and I'm Nisha Podar. And let's start the show with Dalal Street, where the markets really continued their New Year party. Nifty touches the crucial 6,000 mark for the first time in 2 years. Equities gain close to 1% on strong global cues as, remember, the US deal to avoid fiscal cliff really lifts sentiment across the board. Major indices gained close to 1%, as I said, and the US deal to avoid the cliff really helped it, and the Sensex also notched up about 130 points. So that was really the snapshot of the markets. Aisha Faridi is right here to take us through all the specifics. Aisha?
Well, an excellent trading session, so saw a good build up from yesterday, and finally saw that 6,000 mark being crossed for the Nifty after a good gap of about 2 years. 59.93 thereabouts, however, on closing bell. Good traction and participation coming in from the broader markets as well, with a 0.5% to 1% gain coming in for the mid as well as the small cap indices, and over a 1% gain coming in for the banking pack as well. To the gainers then, Bajaj Auto, Maruti Suzuki, JP Associates, IDFC, BPCL, Sequoia, BHEL, ONGC, PNB as well as Axis Bank. And you had good strength coming in for the currency as well, around 54.39 odd levels to the dollar. Like I said, good participation from the broader markets too. So Allahabad Bank, Sun TV, Adani Enterprises, Crompton, Aurobindo Pharma and Tata Global Beverages were your standard performers in trade. The focus of course today was on the auto pack, wherein you had monthly sales data actually coming in. So a lot of activity surrounded around that sector. While Bajaj and Maruti were top notchers in trade, you had a downtick coming in for Escorts as well as TVS. Ditto was the case for M&M as well, and Ashok Leyland closed in just about quiet in today's trading session, and Hero MotoCorp as well as Tata Motors too held out. Let's see how tomorrow pans out. We'll pick it up again for trade at 8 a.m. tomorrow morning. For now, it's back to you in the studio.
All right, Aisha, thanks for the market update. Let's also get some market experts to get their investment ideas going.
I would think flows would be definitely coming through in the next quarter, and through this year, I hope we exceed what we recorded last year. The earnings have bottomed out, but it's still not a very strong earnings growth story. So I think we should play for around a 20% rise in the markets this year. I think the first half it will be the rate sensitives. I would think that at least a 50 basis points, if not more, kind of a rate cut by June.
Only thing disappointing has been that investors are yet to return into the equity funds. We have seen decent flows into fixed income, but I hope that in 2013 people will look at the equity market's potential and they come back into the equity funds. Really expect that 2013 could be that year where we'll see increased retail participation into equity funds.
The way I see it is possibly over the next 2 months, you'll actually see new highs. And in January itself, I see the market actually crossing 6,300, 6,350. Will not be surprised before budget if we see levels closer to 67, 6,800.
All right, let's also get a sense on how the futures and options activity really shaped up for today. We have Navneet Suluja from our research desk standing by with all the details. Navneet, over to you.
Well, Nisha, it was again a good start. You had the Nifty January futures closing at about 60.33 with premium of about 41 points. So you had the premium coming off today by about 10 to 15 points, and we saw built up of about 14 lakh shares for the January futures. And if you look at the options data, well, there was more of call writing seen in today's trading session, and majorly you had the higher level strikes starting from 6200 and 6300 where major open interest addition was seen. So on back of that, you had the Nifty PCR falling to about 0.99 compared to yesterday's closing of about 1.02. And in terms of open interest addition on the call side, 6200 added 17 lakh shares and 6300 call strike added about 11 lakh shares. And on the put side, major addition was seen at 6100 strike, which added 8.3 lakh shares, and you saw open interest being added right from strike 5700 to 6100. And when you look at the stock futures among the Nifty gainers, you had the auto pack, which was in focus. So Bajaj Auto and Maruti saw fresh long positions. Also JP Associates and IDFC were up in today's trading session, so long seen there as well. And couple of counters from the oil and gas space did well. So you had ONGC, GAIL and BPCL where long positions were being built up. So again, most of the positions were being built up on the long side. From the mid-cap space, Aurobindo Pharma did really well in the last hour of the trade. Stock was up by about 4.5%. Huge amount of long positions being built up there, followed with Tata Global Beverages and Arvind, which did well. Couple of losers from the mid-cap space were India Cement, Financial Technologies and Colgate-Palmolive, which were down in today's trading session. And in terms of open interest gainers, you had Colgate, REC, Zee and SAIL, where maximum amount of open interest build-up was seen in today's trading session. Well, in terms of participation, the turnover was better than yesterday. We did about 95,000 crore of turnover on NSE by the end of today.
All right, Navneet, thanks for an exhaustive account of the futures and options action for the day. Thanks so much. And US passes a legislation that awards steep hikes in taxes and sharp cuts in government spending for the time being. And contrary to what many fear, President Obama says that there will not be another debate at the Congress over raising the debt ceiling. Here's a special report on that, something which has been impacting global markets.
On this vote, the yeas are 257. The nays are 167. The motion is adopted. Without objection, a motion to reconsider is laid on the table.
Members of the U.S. House of Representatives have voted to pass a bill that will increase taxes on families making more than $450,000 a year, effectively avoiding the much-discussed fiscal cliff. The vote came hours after back-and-forth debate by House Republicans, who were initially unhappy with the plan for its lack of government spending cuts. But amendments to the bill, which passed earlier in the Senate, would not have been possible as Republicans couldn't muster up enough votes. U.S. President Barack Obama commended Congress for coming together, but offered a strict warning to congressional leaders ahead of an expected showdown on raising the debt ceiling.
Happy New Year, everybody. While I will negotiate over many things, I will not have another debate with this Congress over whether or not they should pay the bills that they have already racked up through the laws that they passed. Let me repeat. We can't not pay bills that we've already incurred. If Congress refuses to give the United States government the ability to pay these bills on time, the consequences for the entire global economy would be catastrophic, far worse than the impact of a fiscal cliff.
Obama is headed back to Hawaii to join his family and resume his holiday.
So European markets really clocked in solid gains after the US House of Representatives finally approved a bill to avoid the fiscal cliff. However, keeping a cap on gains was poor manufacturing output data, while the Eurozone PMI figure really edged down. Germany's number shrank for the 10th straight month. France, Spain and Italy all showed similar trends. UK PMI, however, was at its highest for the 15 months. So these are the data that European markets are picking up and reacting to them, but solid gains continue. And Asian markets too joined into the global party to clock up by nearly 2% to hit a 5-month high today. However, markets in Japan and China remain shut for the New Year's holiday. And more positive global macro data there. China's official manufacturing purchasing managers index held steady in December at 50.6 as growth in new orders was unchanged and the pace of output really softened marginally. With this figure coming in above 50 for 3 straight months, the data indicates that China's factory sector is expanding. The Ranga panel submitted its recommendations on gas pricing and production sharing contracts today. The panel has suggested an alternative scheme for revenue sharing to be based upon the quantum of price as well as production. ET Now's Nitya Balakrishnan spoke to C. Rangarajan about the new scheme, which he says will promote the development of new projects.
The contractors or the bidders can bid indicating what the share of the government will be at different levels of production and also at different levels of prices.
Dr. Rangarajan, one more key recommendation coming from you is on the gas pricing issue. Now, as far as the industry is concerned, that has been a big bone of contention. You are saying eventually link it to international market rates. How soon and in what kind of manner should this be implemented? How phased out should it take place?
No, this is not a question of being phased. I mean, existing contracts will go according to whatever the existing commitments are. The gas-on-gas competition is not possible in India because the limited amount of gas production and so on. Therefore, we have tried to find out an appropriate way of finding out the price which will be fair to the producers as well as to the consumers.
But on the other side, when you talk about sectors like fertilizer and power, do you think they will actually have the appetite to bear this marginal increase?
Well, gas prices are ruling high and they are being determined by a number of global factors. And therefore, it is necessary that users of gas in the country also realize what the real price of gas is. Therefore, both fertilizer producers as well as the power producers have to take this into account.
The finance minister today said that gold import is a huge drain on the current account, which has widened to record highs, remember, at 5.4 levels. Now, P. Chidambaram has also hinted at a fiscal action. Sources indicate a likely increase in import duty on gold by 2% to disincentivize the import of the yellow metal.
I've spoken about the current account deficit, CAD, on a number of occasions. The current account deficit for the first half of the current year stood at US dollars 38.7 billion or 4.6% of GDP. Gold imports constituted a substantial chunk of the imports and is a huge drain on the current account. I would therefore appeal to the people to moderate the demand for gold, which leads to large imports of gold. I may add that we may be left with no choice but to make it a little more expensive to import gold. This matter is under government's consideration.
All right, to take it further, we are joined by Suchetna Ray from New Delhi to take us through the details. Suchetna, is an import duty hike really inevitable on gold, considering that current account deficit this time was at record highs?
The widening current account deficit seems to be the biggest worry for finance ministry officials here, and that is precisely why Mr. P. Chidambaram, the finance minister, pointed out how, apart from declining exports, its gold imports, which stand at $20.25 billion in the first half of this financial year, which is forming the biggest chunk of the current account deficit, which stands at 4.6% of the GDP today. In fact, P. Chidambaram also stressed the need to make gold imports more expensive if this situation continues. He has assured that as of now, India has not been forced to dip into its foreign exchange reserve. The FII inflows and FDI inflows has taken care of the high and rising gold imports. But sources in finance ministry tell us that one way to control gold imports would be to increase the import duty on gold by 2%. And this would mean that this is going to follow the precedence of the last budget. In 2012, we saw gold imports the import duty being increased by 2%. The entire year has seen a 4% increase in import duty, and that has actually shown results. In the April to October period, we've seen gold imports decline by $11.3 billion on a year-on-year basis, and that is precisely why sources in Finance Ministry tell us that they're seriously considering a 2% increase in import duty.
All right, so Chetna, PSU Bank's rally as mark-to-market. Really, okay, we'll take you through that story later, but Finance Minister P. Chidambaram today announced the constitution of the 14th Finance Commission. Now, former RBI Governor Y.B. Reddy has been appointed as the chairman for the commission. As a constitutional procedure, the panel is appointed every 5 years to make recommendations regarding sharing of union taxes, principles governing grants in aid to the states, and transfer of resources to the local bodies. Now, added to the terms of reference of the 14th Finance Commission also includes looking into the impact GST, evaluating the resource availability in debt-stressed states, and considering the need for insulating pricing of public utility from policy fluctuation. Now, the panel comprising of Abhijit Sen, Sushma Nath and M. Govind Rao has to submit its report on 31st of October 2014.
Reference of the 14th Finance Commission, there is a paragraph which says that the Commission shall have regard to, among other considerations, and one of them is the resources of the state governments and the demands on such resources under different heads, including the impact of debt levels on resource availability in debt-stressed states for the 5 years commencing on 1st of April 2015.
All right, to the bond markets then. PSU Bank's rally as mark-to-market gains pile up after a sharp fall in the bond yields. Now, RBI defers a scheduled bond auction pushing 10-year yields to a 21-month low. Poonam Sani joins us with more details on that. Poonam.
Well, Nisha, it's very true that Reserve Bank of India has actually shifted the auction of the dated securities, which was to happen in this week, to the week ending 22nd of February, and as a result of that, we also saw the bond yields going as low as the March 2011 levels. Also, the Reserve Bank of India is going to conduct open market operations to manage the liquidity conditions, and with the Reserve Bank of India monetary policy meet dated during the end of the month, most of the experts expect RBI to cut repo rates by 25 to 50 bips over the entire March of 2013. As a result of this, the bond yields are likely to trend lower only going forward, and because the PSU banks have a higher proportion of the AFS portfolio, there is a likelihood of high mark-to-market gains on the AFS portfolio. Most of the large PSU banks have a high proportion of the AFS book, and as a result, within the large PSU banking space, the PNB and the Bank of Baroda as well as the Canara Bank are likely to benefit from the fall in bond yield support. And among the smaller PSU banks, we have the likes of an IOB, a Dena Bank as well as an OBC, which would benefit quite a bit from the fall in bond yields. Overall, from a fundamental basis as well, analysts prefer PSU banks like State Bank of India, a Bank of Baroda as well as the Punjab National Bank from an overall investment perspective.
All right, Poonam, thanks for all those details. And moving on to the real estate sector then, the property markets continued to suffer through the year with prices ruling at artificially high levels. Now, residential prices were firm, proving expectations of any correction really wrong. The general industry view is that the year will see an improved economic climate and the real estate sector will reap some benefits from that. But will 2013 bring any relief for the home buyers? Ritu Singh finds out.
Buyers flinch at the exorbitant prices and builders at escalating costs. When it came to the realty sector, the laws of economics failed miserably. Despite slower sales, builders refused to relent, saying there is little room for them to cut prices.
High land prices is the most essential factor which is coming as the biggest hindrance in reducing the price. Last 2-3 years, the construction cost has gone up by 25 to 50% up. Huge reduction in the property prices is not possible in 2013 also.
The new home deals in Mumbai saw a 35% dip last year, pushing up the number of unsold houses in India's costliest real estate market. But builders say things could get better, with the economy showing some signs of improvement.
See, the economy in general started to do well, and the government's really taking initiative, and that probably will push the economy. So I think coming 2013, things should really look up.
These numbers apart, the property prices in top cities like Delhi and Mumbai remain unaffordable. And unless there is a price correction, the demand will not improve. Until such time that the builders come to terms with this fact, the wait for the home buyers may well continue into the new year. Ritu Singh, ET Now, Mumbai.
And straight to the Aviation Minister Ajit Singh speaking on the Kingfisher Airlines crisis as well as the license cancellation.
See, what has happened is that Kingfisher's license has not been renewed. But what I have been told is that if they want to fly again, they have 2 years when they don't have to go through the formalities of getting the license. They still have to apply to the DGCA, they still have to satisfy DGCA that they'll be able to maintain safe, secure airline operation. So in that way, situation doesn't change. But the fact remains that their license has not been renewed.
Sir, their employees, Delhi employees, pilots and engineers are meeting today. They're preparing a memo for the government and for the company. In that situation, when they have not been paid since May, shouldn't the license be completely cancelled so that lenders can come and do whatever they want? Still, the license is hanging, sort of.
See, rules say that licenses, they don't have a license today. But what we are saying is that if any airline, any person, any group, any company wants to fly, first they have to get license and then give all the details to DGCA, get permissions. What the policy does is now that if they have been flying and their license is not renewed or cancelled or whatever, they don't have to go through all that paperwork and all that basically. Because their license may have been cancelled for some particular reason. But when you apply, a new company applies for license, they may have to go through a lot of scrutiny on many issues. In this case, or in any case, any airline which license is cancelled or not renewed, we know all those things. All we have to know is that how can they maintain the flight and how they ensure the safety of the flight. And that includes finance, as well as adequate trained manpower, basically.
What happens to the employees that have not been paid? They say they're in, they're in pain, they're hurting because they have not been paid salaries for months on end. What happens to them?
Well, we sympathize with them, but if their employer is not in a position to fly, there's nothing we can do.
Sir, nothing, no arm of the government can do apart from maybe Civil Aviation Ministry?
I don't know if Labour Ministry can do anything or not, but as far as Civil Aviation Ministry is concerned, we certainly can't, because see, the basic problem is they don't have adequate finances. So Civil Aviation Ministry can't do anything about it.
सर, लेकिन अब इस केस में जहां उनका लाइसेंस कैंसिल हुआ है लेकिन 2 साल में रिवाइव हो सकता है, अगर वो कल भी प्रक्रिया शुरू करते हैं अपने रिवाइवल की या लाइसेंस को दोबारा रिवाइव करने की, तो कितनी जल्दी वो फ्लाई कर सकते हैं?
See, the problem in this case is that they have, I think about 3,000 to 4,000 employees today. If they want to continue with those pilots and engineers, then pilots especially have to be retrained. It will take 3 to 4 months. Of course, they may start with new qualified pilots, I don't know. So that problem comes first. And then airport authority also would have to get some kind of guarantee, some assurance that their dues will be paid. And to run any business anywhere in the world, you need working capital. It's not only just starting operations, you require a fund, but then you need working capital, and I don't think any bank is in a position today. Kingfisher is in very bad situation, but even for other airlines, they are having problems getting any kind of capital from banks. So that will be a big problem for Kingfisher also.
Does it look difficult that airline को ये समझे आपसे कि अब एयरलाइन दोबारा नहीं उड़ पाएगी?
No, we hope they can. We hope for employees' sake. We hope for banks' sake. We hope for airport authorities' sake. We hope for government's sake because they owe a lot of tax. They owe a lot of tax. No, I still wish, I still hope, as I said, for the sake of a lot of people involved in this business, there will be a lot of collateral damage if they don't fly again. We can only wish, but we are in no position to help them.
Then moving on to ADF.
All right, so that was Aviation Minister Ajit Singh giving us details on the Kingfisher Airlines crisis. Remember, on 31st of December, the already grounded airline, of which the licenses were suspended earlier, they lost their license because of a lack of a commendable revival plan that had to be given to the DGCA. Now, the Aviation Minister really confirmed that the license has not been renewed, and he also expressed sympathies for the KFA employees. Remember, there are still 3,000 to 4,000 employees in the company who lose their job now that the company and the carrier is not flying, and not sure if the Labour Ministry can really help to recover KFA employees' dues, is what Aviation Minister just said. And there will be also collateral damage if Kingfisher Airlines really shuts down permanently, is what the Aviation Minister had to say. Also remember that they still have a window of 2 years in which they can come back and try and renew their license. So that is something that has to be seen. But at the moment, Aviation Ministry expressing concerns about Kingfisher Airline losing their license and really not being able to fly. With that, it's a wrap on this edition of Business Day. Stay tuned to ET Now.